Welcome to XM.com for this Forex Preview video. The U.S. economy entered a technical recession, even though the Fed and White House downplay the fact, arguing that businesses are not closing down and the unemployment rate hasn't risen. But what will the Nonfarm Payrolls report have to say about that? I'm Cristina Marujos. Joining me today is Senior Investment Analyst Mario Sechigiriakos. Mario's Friday's NFP report will gather a lot of attention, and of course investors will be curious to see if the jobs market is showing any cracks. Therefore, what are we likely to see in the data?
Hello, Christina. Well, I think you hit it right on the head in your introduction. So we've had 2 consecutive quarters now where the US economy contracted. We used to call that a technical recession. And if you look at business surveys, they suggest that the economy deteriorated even further in the third quarter. So things are getting worse. And yet we've seen both the Federal Reserve and the government saying, yeah, this is not a real recession. Where are the mass bankruptcies? Or how can the labor market be so strong and we are in a recession? How can we have a recession with the unemployment rate near a 5-decade low? The problem with that logic is that they are looking to the past, right? The labor market has always looked strong right before a recession. It's the last domino to fall, in a sense. It's a backward-looking measure. The forward-looking measures, meanwhile, are all screaming recession. New business orders have been falling, inventories are very high, consumer confidence is the gutter, and the bond market the yield curve has inverted quite dramatically, suggesting that a downturn is imminent indeed. So the labor market has been the pillar so far that has held the economy up, and that's why there's going to be a lot of focus on the upcoming employment report. And Wall Street suggests that we are likely to get another solid report. Despite all of this, the economists expect another very decent month for the labor market. Non-farm payrolls are expected at 250,000. That's less than the previous month, but it's still a very solid number overall. The unemployment rate is expected to have held flat near that 5-decade low, and average hourly earnings are expected to have cooled a little bit. Now, looking at some labor market indicators, I think that if we do see any surprises, it's more likely to be a disappointment rather than a positive surprise in this data. And I say that because of what the latest business survey showed. So the S&P Global PMI showed that job creation slowed to the weakest pace since February. And we also saw some similar signals from the ISM manufacturing survey, and jobless claims have been rising for a while now, signaling that more people are filing for unemployment benefits. So I'm looking for a weaker than expected number as far as non-farm payrolls go, but I don't think it's going to be a disaster either.
Let's explore that point a little bit, looking at the dollar, of course, because the dollar rally has cooled recently. If the NFP numbers are skewed to the downside, how could that affect the greenback?
Yeah, so if we do get a disappointment in non-farm payrolls, that probably argues for a negative reaction in the dollar. We might see the dollar taking a step back. However, I would hesitate to call for any trend reversals. I don't think we are looking at any trend reversal in the dollar just yet. And here's how, let me put it this way. Yes, we might get a disappointment in non-farm payrolls and the market prices out some Fed tightening and the dollar takes a step back. But at the end of the day, if the Fed is slowing down because it's afraid of a recession, that could still keep the dollar supported from a global perspective. So think about the situation in the rest of the world. Think about Europe. Europe is in even worse shape. If there's going to be a global recession, Europe is probably going to be at the epicenter of that. The recession there is probably going to be deeper. So if we do have a situation where the central banks are getting priced out because the markets are afraid of a recession, that might keep safe haven flows, that might keep demand for the dollar elevated, essentially, because it's the reserve currency. So I don't think we're looking at a trend reversal, even if we do get a negative reaction this week. And for me to change my mind, what can really turn the trend in the dollar around would be an improvement in the growth outlook for Europe and Asia. We need to see, We need to see those economies improving so that capital can flow out of the US essentially. And for that to happen, what might cause that? A ceasefire in Ukraine would be a good start. That would lower oil prices and kickstart the European, the Asian economies. But it's not looking imminent. It doesn't look like we're going to get that. So I would argue that the trend in the dollar is still positive.
Marius, thank you so much for joining me today. And thank you for watching this Forex preview on the NFP report out on Friday here at xn.com.